Alrighty, how we doing today? It's been a while since I've made my last video. Uh, I've made a couple trades these last 2 days. Let's see. Oh yeah, I made my trade on Thinkorswim yesterday. I was using the Thinker Demand platform. But, anyways, let's get into this market recap. I'm just doing a morning market recap today. Uh, I've realized that I could do full day recaps, but there's no point. I mean, I only trade from 9:30 to 11:30. I'll probably end up doing full day recaps down the road, but just get back in routine. I need to start making morning routine recaps. That way they're shorter and easier to do. But anyways, the S&P 500 or many S&P 500 contracts or just the S&P, they're still running in through the 2900 price range, which in my last video I've been talking about since August. This has been the price range since August. It has been an interesting couple months. I mean, look at this. This is the range that we have been in literally since August. We have not broken this range. We have just been going up and down, up and down, up and down. Every time we go up, it seems like we're going back down, and then when we go down, we go back up. So it's the kind of market where, well, you can tell I've made a few trades here and there. I don't know where all my other trades went. I had like thousands of trades in through here, but anyways, yeah. So the market has been running into a range. So I mean, there's still plenty of opportunity for scalpers and stuff. But I mean, if you're a long-term investor, you're probably going to get pissed off from this because the money you're making, you're losing your profits, and then you're making your money back, and then you're losing your profits, and the market's just deciding what it wants to do. I mean, we've had two federal interest rate cuts, so I mean, I don't know. I mean, in my opinion, that's not looking good on the market. Uh, I'm not sure if we're going to a recession or not. I can't predict anything like that. But I mean, considering the last interest rate cuts from the Feds were in 2008 during the recession. So, who knows what's going on. I don't pay attention to that. I pay attention to the seconds. I trade by the seconds. I don't trade by days. I mean, I like to look at it just to see where I'm at, just see what kind of market I'm running into. I will pay attention to that, but considering in for my trading positions, that doesn't affect me. I'm focusing more on the day chart. I'm focusing more on every single tick. That's about it. Seconds. Because, when I get into my trades, they're only a few minutes max, depending on how much volume is running. If it's little volume, then my trades might be more longer than that. But anyways, let's get into this recap. Today's been, obviously, you don't have to be a genius to tell what kind of day we're in right now. We're in an uptrend. So far in the morning, it's only 11:30, but since 11:30, we've been trending up. I didn't wake up in time. See, that's been my factor, is not waking up. I was waking up at like 7 o'clock every single day for like a while, and then I just started sleeping in last week. Today I made myself get out of bed, get on here and make a trade. So tomorrow I'm definitely going to be up 9 o'clock on here. Anyways, yes, we've had an uptrend all day. The market yesterday, like I said, we're just teeter-tottering in the 2900 range. So I mean, it trying to make another retest back there, failed, came back up, and well, actually we're running still up from yesterday. We got a new high from yesterday's high, so that confirms we're on an uptrend for the day so far. But let's see, market comes in. Nobody's really trading around 3 o'clock, so I kind of ignore this. But right off the bat, you can tell, you got higher, you got more buyers controlling this market, as you can just easily tell. It looks like there's some sellers coming in right here, but the lows are holding nice. So around 9:30 comes, that's when the buying momentum just picks up and really doesn't stop till like 11 o'clock. And here recently, I've been making a lot more shorts than I have longs. Like, I honestly, I can't tell you the last time I made like a bullish trade. I've been just shorting after shorting after shorting, which is very weird because I mean, honestly, I feel like I used to be a bullish biased investor, but you know, this mentor, Al Brooks and Pat's Trading, they kind of made me realize that that's kind of stupid, because in the market there's no room for being biased. Like, to make money in the market, you got to trade both sides. You have to understand. I mean, in my opinion, that's my opinion. Of course, there's some people out there that just probably buy and still are profitable. Not saying it's not possible, but you got to be able to trade both sides. You got to be able to read the market. And when you're a more bullish and biased investor, then that takes opportunity away from you because you're only looking for the bullish moments, and then no matter what market you're in, you're going to be looking for bullish opportunities. But sometimes in the market, there's not always room for a bullish opportunity. Sometimes, you're just running bearish trades. So it's nice to do both. But literally for 2 months now, I feel like I've done nothing but short. Which, oddly enough, I used to hate shorting. But my success percentage has like almost tripled from my shorts. Like, when I was just looking for bullish opportunities. Yeah, I'd make one here, there, make one there, lose one, make a couple, lose one. But I mean, it was shorting. I've been making one win after win after win with the shorting. It seems like it's easier to tell when something's going to go down than it is when it's going to go up. Don't know why for me, but it's just how it is. So I mean, I've been sticking to it. I'm not saying I'm a bearish biased investor now. It's just it seems like that's just more of the opportunities I've noticed. I feel like fails are easier to turn. Like in this market right here, on this trade right here, this is the one trade I made today. Like, I mean, if you watch my videos, I keep my price targets only 4 or 5 ticks with one contract. If I have 2 contracts, I'll have a price target at 4 ticks, then I'll run the other contract at like 8 or 10 ticks, to get that extra few dollars and to secure my profits and to control my risk on the trade. Another reason why on this one right here, I took this trade. I'm just going to talk about this trade real quick. I'll start right here at the beginning, and then we'll talk about that. Well, I mean, there's really not much to go on. 7 o'clock comes, you got some sideways movement at right here. You got some support level holding up. Obviously, you can tell it's a battle of the Bulls and the Bears for the open. Bulls obviously win right here. You just got the new high lows right here. You got another new high low. You got, you break through the support level or this resistance level, and 930 comes and it's just green after green after green. Now, I know some people like taking these pullbacks on these moving averages, like, these few tick pullbacks off the 21 moving average. I don't have any trend lines, so I don't really need one today, but I know a lot of people will take these few scalps right here, which, I mean, they're not bad opportunities, not bad trades, don't get me wrong, but I mean, considering the market that ran and it's constantly bouncing off this $3,000 level, I mean, not really sure what's going on here. Not sure what could be happening. I like to wait for a second confirmation, because I mean, yeah, right here you got a second entry, but I feel like a second entry still isn't enough. I like waiting for those failed or those failed second entries, and then wait to see what happens and wait for that to fail again for another confirmation. I'll talk about that in this trade right here, what I mean exactly by that. But we come up through here, you know, yeah, you get a little pullback right off the moving average. I mean, don't get me wrong, I've taken these trades before, but today, I wasn't on the market, so I didn't take the trades. But it's just bouncing off here, really, not much going in with it. You just got buyers coming in the market, and then you got these pullbacks on the moving average. You got another few scalps right here. I mean, I'm gonna mark them for some people because I know some people will take that trade. But I mean, honestly, I don't know. I feel like it's not good enough trade for me to take. I like to wait for those ultra confirmations. I'm gonna change the color of that. It's an ugly color. I'll move it up here too. But yeah, so you could have taken this trade right here. Got it on a few talks. The first one, I would have waited till the second candle to get in on the first one, but yet again, this one I wouldn't really take this one because you got to look at your risk that you're going in on your trades. You have this support, you have this resistance level right through here. You've had a bunch of resistance right here. So, taking a buy right here at this high, I like buying low, selling high, so really at this situation in this market, you're considering you're running high at this point. So, since you're running higher and your, stop loss has, less downside, or your trade has less room on the upside, my bad, and you have less room on the upside, I feel like it's a little bit more risk with it. However, right here, this is kind of like a confirmation to show us that, we're running out that trend. You got the support right here, kind of above this, where this resistance was. It kind of shows you that what the morning decided, you know. Now, yet again, a lot of people, like Al Brooks, he's a good trader. He says that, like, the first run in the market usually fails, half the time, 50% of the time it fails. So you're always looking for a fail in the open. So when you see a bunch of runners in the open, you're looking for a fail right back down. So, this just gives a confirmation, you're still going up. So you're running up through here. Wouldn't take this trade, not at all. Really, there's no upside on this one. I mean, of course, I was wrong about that. There is upside, but in the moment, I wouldn't really see much upside. I mean, you're still trending up and you're holding the moving average. So you could take in that one, but it wasn't a strong enough pullback for me. And look at all this, room that you have to run with your stop loss. So I don't really like that one. If you set your stop loss, you're gonna have to set it down there, and that's like 5 points, 4 points. That's a pretty wide stop loss you're looking to make. What your few ticks on it. Wouldn't really take that one. So when the market's kind of running extended like this, uh, like he says, 50% of the runs will fail. No, I wouldn't consider this a fail. I consider this a retracement, a correction. My bad. So when we come up through here, I was on here looking at this. I see this sell off right here, and I see this candle, and I was thinking, I was like, well, I'm gonna watch this and see if it tries to make another run up for the high. Now, considering that we don't have much room on the upside at this point, we're at a very strong level, 3,000. You know, it's not really looking that much good for me for a buy at this point. After this huge runner in the morning, it's 11 o'clock. Might be looking for another run on the downside. So at this point, not. So at this point, not really looking for much room on this trade. So I was looking for a short. Since we're at this top, we're at the 3,000 level, I was looking for a little correction after this huge run. So let's see if I can zoom in. Yes, okay. Doesn't look the best right there, but I mean, I keep my target short, so try to not make much. And when how I made this trade is I put a buy order in, or I put a order in, stop order, because I always put a stop order in when I buy, so I'll have no slippage on my trades. Sometimes, depending on what kind of trade I'm looking at, if I'm like right here on the ultra top and it's a key point, sometimes I'll click just a market order. It'll execute pretty quick. One tick ain't going to do that much when I feel like there's a lot more on the downside. So, but on this one, I made sure I put a order in so I didn't have any slippage. I put an order in like right here or something, and I could tell right away that it wasn't going to go back up and get hit. So I just kind of moved it down uh, a couple ticks where it would get hit. So I was trying to get in on this candle right here at this point, because we come up through here, we get this run, and then we have this another retest, and then this retest ultimately fails with this trend bar right here that overlaps. So you get this huge trend bar right there. I'm just automatically considering a correction, a short-term correction. I'm not sure how long it's going to be. Let's see, it ended up being like 6 points. It's not bad. You can make your money for the day on that. That's like 24 ticks. So I think that's right. Yeah, 24 ticks. So you got 24. You got 24 ticks right there. It's more than my profit target. It's more than a lot of scalpers' profit targets. So I get in on this short. Try to get on the correction. I was only running one contract, so I had a 4 contract order or target. So it hits the target, and I'm out the trade. It wouldn't have been a bad 2 target or 2 contract trade at all. I would have got my 2 contracts in, had my stop loss. That's why I like this trade. This is what I mean by there's room on the upside. If you're taking a buy all the way up here, look at all this room you have down in the downside until you get some support. This is your support down here. So you don't know where it could pull down. It's a support. You get stopped out easy. Rather than if I took a short on the top, all the way at the top on a 3000 century level, then there's obviously less room on the upside on the short. I know where my stop loss would be. I'd run my stop loss around here because, if the prices move back up there, you know where the market's going in that direction with all this trend. So therefore, you can run a tighter stop loss. You have less risk on your trade. Your risk management's better with it. Uh, it's all about controlling your risk on your trades. If you're going into a trade and not knowing, your exits, your entries, knowing what room you have to run with, you're going to lose money. Because really, you're just jumping in the market and you're not knowing where you're at. But if we jump in here, we have this upside right here. We have this little room to move back up. And with this trend bar and this huge runner, it's down for a correction. So, go in here, take a short, run my stop loss is up here. My limit, stop loss is up here. Get in, take my trades. I'm done for the day. Made my target. No more trading unless I see something spectacular. It's really rare for me to make 2 trades in one day. I really don't see a point of it. I see it as if you have a target, you just hit your target and you focus on position building. Because if you can just hit your one target every single day, then you're going to be profitable more than others. If you're going to go in there and try to hit 3 targets, 4 targets, then your chances are just getting smaller, I feel like. If you can go in there, you have a small target, you get in, you hit your one target, and you're done trading for the day, then your chances are more because, consistency is what you're focusing on. You're not letting the emotions get a hold of you. You're not trying to gamble your money. You're not trying to make as much money in one day as possible. Because when you try to make as much money as you can in this, that's when you blow your account. The only way to make money in this is to make $5 a day, for a month straight, and then try to make $10 a day for the next month, and then make $20 a day for the next month, and then just slowly focus on building position sizes, and then once you increase your position sizes, in a year, 2 years from now, then you're generating a real income from this, and you can live off this, but living off this I feel like would be stressful. I don't live off it. I feel like it would be stressful because it's your only form of income. So therefore, you're going to put more emotion into your trades because you need that money because this is your only way of money. So unless you're making like $400 a day, $300 a day, making some scalps, still I wouldn't even know. I mean, if you're only trading from 9:30 till 11:30, there's no point of you not working, a day job at the night. That's still an extra $150, whatever job it is you're working on top of the 400 you made in the morning. So I mean, there's still money to be made doing something else. No, of course, there's some people who, who are traders that are making, $2,000, $20,000 in a day. That's a different situation when you're pulling in $100,000 a month. You don't really need that day job. You're making your money. You show you're consistent. If you're consistent for like a year, every month, then obviously, you're on the right path and you're on the right thing. But yeah, I feel like that's it for the video today. We got some support level right here. It looks like we're kind of moving sideways right there. We might just run in through a range through here. Who knows what we're doing? Might break through the 3,000 level. Honestly, I'm not making any predictions with this market at this point because it's doing what it's want. It's obviously staying in between that range. It goes up past 3,000 a few times, but it's obviously staying in that range. That's it for the video today.